following is a paid program. The opinions expressed are not necessarily those of WNBU and Interbanks Media. Welcome to All Things Money with David Blain, a thoughtful and revealing discussion of actionable ideas and effective strategies to help you through the complex world of investing, taxes, and real estate. Now, with All Things Money, here's David Blain.
Hello and welcome to All Things Money. I'm your host, David Blain, and today is April 17th, 2012, the tax filing deadline. If you haven't been paying attention or your taxes are due today to the IRS. Normally it's April 15th, but this year there was a holiday. The 15th was Sunday, and then yesterday was a holiday in the District of Columbia, so the deadline is April the 17th. I thought we'd talk a little bit about some taxes. This time of year, of course, we do most of our clients' taxes. We have a lot of tax expertise in the firm. We have CPAs, enrolled agents, business planning expertise, and so this is a very busy time of the year for us, and it always gives me a chance to reflect on where the money goes and the tax system, and I tell you, it's a big mess right now. And of course, yesterday the Senate shot down a vote on the so-called Buffett tax that would tax people making over $1 million per year, a minimum of 30%, and it only affects a few people. It's not going to do anything for the deficit. It would fund the government. I think I saw somewhere that it would fund the government for like 11 hours. And it's just a political posturing, but it brings up this issue. This is what consistently happens, is that Congress just slaps another law on top of everything. They just keep piling these rules on, and such that in the past decade, the tax code has tripled in size. And as I talked about last week, at the end of this year, we have Tax Armageddon. If you haven't heard about it, we'll devote some time as we continue through 2012 to this topic. But suffice to say, at this point, there's a number of tax provisions that are expiring at the end of this year, as well as new taxes being enacted that Congress has yet to address and probably won't even attempt to until after the election. And if you think in the 6 weeks or so between the election and Christmas break, they're going to fix thousands of pages of the tax code, it's probably not going to happen. So we've really got to watch the end of the year. As you get 2011 taxes behind us, you want to make sure you have your eyes wide open going into 2012, because it is going to be something come January 1st, 2013. Let me give you the phone number for the show here, or phone number for my firm. If you have any comments or questions, please feel free to give us a call. We do get quite a number of calls and emails. The number is 252-633-0107. The email to the show is allthingsmoney@dlblain.com. And of course, you can visit us on the web, www.dlblain.com. There you'll find our website with a host of information about myself, some of the other advisors that work at the firm, what we do, how we do it, as well as what I call the Knowledge Center, which is years and years worth of audio files, video files, articles we've written, articles that have been written about us. It's a wonderful resource that I encourage you to take a look at. Okay, as you're writing those tax checks to the IRS, or maybe you're getting a refund. If you're getting a refund, you may want to rethink that. Or my philosophy is that come tax day, you should be writing a check, which means that you kept your money and not the IRS. A lot of people like to get that refund check from the IRS. They claim it's a sort of a forced savings. Well, we've got a better way for people to save than let the IRS keep your money. But anyway, we want to talk here in the first segment or so about where actually your money goes. One of the best things for government, and one of the worst things, I think, for the population of the United States is withholdings. The fact that your Social Security and Medicare and your federal tax are withheld from your pay, and most people don't realize it. So let's say you make $50,000, but after tax you take home 35. Well, most people view their income as 35 and not 50. And then at the end of the year, come April, if they have to pay $1,000 or they get $1,000 refund, that's kind of what mentally they owe in tax. You know, they say, oh, I owed $1,000 in tax. But what they forget, or it is not forefront in their mind, is that they paid $15,000 throughout the course of the year to Social Security, Medicare, and withholding. And from the government perspective, it was one of the most brilliant things they ever did. It's kind of the story of the boiling water and the frog. You know, if you throw a frog in boiling water, he jumps out. If you put him in water and slowly turn the heat up, you can boil him. The same thing with the taxes is by having it withdrawn from the pay, people aren't cognizant on a regular basis of how much they're paying. Or on the flip side, if you have business owners and people that are required to pay estimates at least once a quarter, it's very obvious what they're paying in. And that's why I think you see that sometimes people that make more money or that own businesses are more agitated at the whole tax system than regular people, because they're not aware of it. Kind of, you know, Warren Buffett's secretary has been a lot in the news. Obama used her as a poster child. Well, she probably doesn't even realize what her tax rate or pay much attention to it at all, because it's all taken away through withholdings before she gets her paycheck. Where people that are actually writing a check, it's the same thing we talk about all the time with health care and with education, is if you're not writing the check and you don't have that connection between you and the product or service that you're receiving, what happens is overpayment tends to happen and the quality of the product or service goes down. And that's exactly what happens, is people aren't writing a check, you know, to their neighbor for Social Security or Medicare. It's withdrawn from their pay. Their employer's required to send it to the government, where, you know, 50% of it gets siphoned off for salaries and Las Vegas trips and things like that, and then the rest gets doled out. And so there's huge disconnect between the people that are paying and the service that is being provided. As we talked about on other shows, the same thing happens in health care. You know, if you go in and you've got a $20 copay, there was a great ad on TV by Blue Cross Blue Shield of North Carolina, and the wife was sitting there on the computer, and the husband's like, "What are you doing?" She said, "Well, I'm looking up the cost of surgery." And the husband takes the laptop and he throws it out the window, and he's like, "You're not supposed to hack into the hospital. That's supposed to be secret." And it sort of is. I mean, that's a perfectly typical example of health care and why we need people to be more aware of the cost of things. It will really help drive down the cost. Well, we're coming up to our first break. When we continue, we'll continue talking about where your tax dollars goes. So for All Things Money, I'm your host, David Blain, and we'll be right back.